the space that we're playing in, these smaller smaller private equity opportunities, because first of all, it's very important. It's a less efficient market. So these are opportunities where there are not a lot of people playing. So one of the keys of being good in private equity is the price at which you get into a deal. And so there are fewer people competing for a deal. If there's less of an auction environment, you're able to get in at a good price, negotiate a transaction versus being another bidder. So we like being able to play in that very small niche. We like the fact that there are ways to work very closely with companies, be able to strike an exit as the company grows, and then take the company from being below the radar of the bigger buyers into growing over a period of, say, 3, 5 to 7 years into a position where you do start attracting buyers who are going to compete with each other to pay a high price. So come in without very much competition when you're bidding, and then make an offer where there are a lot of competitors for what you're selling. In terms of the opportunity, again, we like where we are, so kind of unusual because usually want to be in the upper right of every single chart like this, but we actually find that there's an interesting opportunity, here, where, as I was saying, there's been a lot of excitement and involvement in venture, and there have been people who've been trying to go out there and do big project deals in the kind of clean and green space, but very little in this area because the market has been really kind of growing into the opportunity that we've seen emerging. So, talked about the team and our positioning, and then where I want to kind of take this as I wrap up is our investment style. So, again, we're focusing differently from venture capital. We're very exit driven. We're really focused on companies that can show us the money and are demonstrating cash flow where we can see a clear path to an exit. We can work very closely with management teams. In a lot of cases, we've been able to step in, and I'll share some of the dynamics of this with the deal which is completed. And we're explicitly integrating sustainability. I think this is really important with regard to the content of this discussion, that we are, unlike any other institutionally backed fund that I know of out there, we're actually explicitly integrating sustainability into what we do. And so what is this? We've actually adopted a set of a framework from an organization called the Natural Step that was started about 15 years ago in Sweden. International organization that's worked with companies like IKEA, Home Depot, McDonald's, and numerous other companies and governments to actually define what it means to be sustainable. So instead of just sort of going out there and vaguely talking about, well, this is green or it's not green, they've actually laid out a very clear heuristic for what sustainability is all about. And we've actually integrated this heuristic as an integral part of what we do when we look at deals, when we analyze deals, and when we actually work with companies. And this is an image that is admittedly blurry, but gives you a sense of what we have been doing, where we actually integrate sustainability assessments into our investment theses. And this we see is creating a big benefit. We can talk about this more in the course of the discussion with risk reduction, and we've seen this where people who've been jumping into clean and green but not really integrating an explicit understanding of sustainability have run into some real issues. So for example, there are companies like BrightSource that has raised billions of dollars both in US government loan guarantees and venture capital that suddenly finds itself getting sued by environmental groups over endangered species issues where it's building its plants, or losing a significant amount of real estate in which it's looking to build its plants because the fact that the US Senate has converted a bunch of its land into national monument. So there are issues like that. There's long-run viability where you build a semiconductor fabrication plant and suddenly discover you're using huge amounts of water, but as Intel did this, you're operating in Arizona, and suddenly as we run into big water issues, your plant, which you thought was going to have a 40-year life, is running at half its capacity after 10 years. And then finally there's stakeholder support. And we've seen real value, even in our first deal, with being able to bring sustainability into what we do. Our first deal having been an investment with a company called Air Drilling Associates based out of Denver, $10 million growth financing. This is a company that really fits the prototype of what we're looking to do, the archetype of what we're looking to do. A company that has been around for about 9 years, that has a proven technology they've adopted from traditional oil and gas that proves to be extremely effective for doubling or tripling the speed of geothermal drilling worldwide, and allows people to produce geothermal power with basically twice the productivity so you not only speed up the drilling process, speed at twice the productivity of traditional geothermal drilling methods, and they very quickly put themselves into a top 3 market share in the world, have been EBITDA positive for 5 years, and we came in, again, this is one of those companies under the radar, so we were able to come in, source a proprietary relationship with the company, and then through our relationships, our networks, we've been able to help them access financing on very attractive terms. We've actually been able to bring in the US government, which is very excited to the point about stakeholders, about being able to come in and participate in something that's really sustainable. And we've positioned the company to continue on a great trajectory to support geothermal, which we see as a really, really promising opportunity. So that's our story, and look forward to talking about it more during the discussion.
Yep. Hi, I'm Drew Clark, and delighted to be with all of you today. I have kind of a different point of view, I guess, continuing the tradition of diverse panel. Coming from IBM, many of you might not think of us probably even as a West Coast company, but probably also in the same kind of company here. We started a venture fund in 2000. And the purpose really was not to invest for equity. Indeed, today we don't do that, but rather to help source innovation that can play a key role in delivering important solutions to our customers. So we're looking at it right from the start as a strategic play, not as a financial play. And 11 years later, we've kind of kept true to that. Today, we don't invest directly in startups, but we do have a fund of funds where we invest in many of the funds that were in the lower left quadrant on your chart there, who are all, many of them top tier VCs. And so the idea here is leverage. It's to really stick to kind of the corporate DNA that says that you probably don't have a lot of patience to work with small, risky startups, but that within your industry, within your field of expertise, you have a great deal of expertise in taking companies to market, in helping them become successful, and introducing them to your ecosystem. So we kind of team up with VCs in that sense. They put the money up front, they've got the DNA for the appropriate risk in the initial capital outlay, and then we work with them kind of on the back end to help take many of those companies into the ecosystem, into hopefully successful business propositions. So that has taken us in some very interesting directions, because one of the key areas of focus is indeed energy and environment and sustainability, and many of the things that panels have just talked about, we're also investing in. When I say investing, I mean like-kind kind of investments, not capital, as I've said. So we work with, mentor, coach, help provide support for many companies in spaces such as sustainability, of course, but also energy, transportation, water, healthcare. Many of these are actually working in social spaces, in spaces that are very key to sustainability. I've got a couple of examples I'll tell you about in a moment. But I kind of wanted to emphasize that from a large company point of view, we can have a great deal of leverage, or as Al Gore would call it, wedges in some of the significant problems, because we can put a great deal of investment of time, energy to work in many of these spaces that might help catalyze some of the innovation that's happening here that otherwise might take a long time to get to work, or might not get there at all. I mean, we all know about the chasm of death here. You know, when a startup gets to a certain point and they're looking for, say, debt capital, which is probably not available for many of the solar companies, for example, right now, and at least in this country, we could work with a company like that and perhaps help them along and help them over that chasm and guide them into some business opportunities that might make the difference in getting that technology available for all of us. So there's a key role, I think, that large companies like IBM can play. The other thing I want to mention is global reach. We have a great deal of presence in a lot of the very countries that we're all focusing on. Countries in the Middle East and Africa, throughout Asia, Southeast Asia, South America. We can bring a lot of good things to bear in the social and business circles in those countries. We've opened something like 40, I think it's actually 39, what we call innovation centers throughout the world. These are in places like Rio and Kuala Lumpur and Mexico City and other places. And these centers essentially are places where entrepreneurs can go to get resources, to get help, to help bring their companies along, perhaps even to help to work with us to help shape them up so that we can perhaps take them, introduce them to a VC, perhaps to get some initial funding, or to an angel, or whatever's appropriate for that region. So we're doing a lot of things like that to help nurture the startup community, to help nurture entrepreneurs interested in doing many of these kinds of things. I have some examples I want to talk about. Many of you might have seen in the news, I think this past weekend, that Acumen Fund just invested in a company, excuse me, called Sproxel. And any of you heard of Sproxel? Boston-based company, good. It's excuse me, it's a great company that's doing a lot of good things in tracking and monitoring. And you might say, well, what's that? What's the social side of that? Well, it turns out that Acumen was interested in their application in drug fraud. In many countries throughout the world, we find that as much as 40–50% of drugs that are sold or prescribed are either not what they claim or are very, very under effective in terms of the dosage that's available. And so they're either outright frauds or they're not effective. And so Sproxel's developed a technology that can really help track and give and empower the people who receive these drugs, excuse me, the ability to then verify that they're indeed getting what they thought. And so this is an example of how IBM, working with Sproxel and helping connect them with funds like Acumen, really kind of, excuse me, applies that leverage I talked about. Other examples include microfinance organizations. There's a firm called Endeavor, many of you are perhaps familiar with. We are partnered with Endeavor in many of the countries, trying to provide, thank you, lifesaver. Trying to provide the support that we can provide to an organization that's already really very effective in many emerging markets throughout the world. And so again, combining our strengths with a firm, an organization like Endeavor really adds up to something very special. The other area I want to mention is kind of what we're doing where technology meets sustainability. And so we have a lot of things going on in IBM that are not really going to end up in products, or not really destined for the kinds of businesses that we're traditionally in, but still have applicability. So we've got our research people working in things like advanced membranes to help make desal and purification process more accessible to people. The Achilles heel for many desalination projects, of course, is the expensive and complex membranes that are required. And so our scientists who are thinking about membrane technology to perhaps develop a better semiconductor process have also realized that maybe that same technology could be brought to bear in excuse me, other applications such as purification and desalination. So we're working with companies now to find a way to productize the technology and bring it to market. Another one of my favorites is the whole issue around plastic water bottles. I mean, which is like the bane of my existence. It's just horrendous that we have so much plastic that is not reused, that is just one way and destined for landfills. And I was delighted to hear about a year and a half ago, really. but that's the hope, right? So we're working with Coca-Cola here, who is aware of this, obviously, as a huge user of plastic water bottles, to help productize a plastic recycling process. So taking the kind of plastic that's in these bottles. And through a very interesting proprietary process, being able to literally melt the plastic into a form that can be repurposed into other kinds of plastics without waste is something that, excuse me, we're very excited about.